Good morning, Tony Virtue speaking, Virtue and Partners, and welcome to the Skiff Club, where we're having our annual strategy meeting. Just running through the newsletter, the Trump tax cuts working through, so obviously the market's on a bit of a tear over in the US at the moment, probably to be expected. Now, over time you'd expect this to settle down, and some kind of correction will have to happen at some stage. If you look at the tables there, we've had 8.5 years of growth, and you know, a correction of 5–10% would not be a bad thing. It would just stabilise the markets rather than something bigger happening at a later stage. In Australia, we are still very much dominated by the banks in our index. The largest 4 banks making up 25% of that. And as you can see from my script there, they tend to be really reducing risk at the moment. They've sold off their life companies, listing their funds management businesses, getting rid of their financial planning businesses. So the long and the short of that is that there'll be a fairly simplified operation, still looking to make $30 billion between them a year, pay most of that out in dividends, plus franking credits. That said, hard to see much growth coming out of that. So if you're looking for growth, you're going to be looking more at the smaller companies coming through. We do a lot of work in that sector. As mentioned, the Australian financial services sector is in fact 50% of the index. So a lot of them are very tightly correlated. They'll all do well or they'll all do poorly. So let's just see how that plays out at the moment. But there is opportunities in that area. Overnight, the first of the FAANGS, that is the Facebooks, the Amazons, the Googles, the Netflixes, came out with their earnings, which was Netflix, which was outstanding. Just goes to show what is being achieved at the moment with organisations that are relatively new, start out with a good idea that improves consumer experience and then commercialises that over time. Coming out after Netflix, you'll see the others over the next few days. And for future listings, Airbnb, Uber, Spotify, all looking to list later this year. One thing they have in common is algorithms, which preempts how we think based on our previous patterns. Again, what that will mean then is that more and more of this wealth is coming from the actual advertising dollars behind that. This is quite duplicatable and can grow into other markets. So that has been where most of the growth in the US has come from, just from those few shares there. So all in all, things looking okay at the moment. Property is obviously settled here in Sydney. That's probably a good thing, less like they'll raise interest rates. Let's see if we can just stay in this Goldilocks area of not too hot, not too cold, but markets being supportive. Next few weeks we have our interim earnings, so most of the companies will give us an update on how they're tracking. That will give us a better feel for the economy as a whole. More information on this on the website, and I look forward to seeing you all as the year progresses. Cheers for now, Tony.